warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Egbarago. It's Tuesday, the 30th of June. We thank you for joining us at this time on the show.
All right, let's tee off with news now. As usual, Mozambique has kept its benchmark interest rate unchanged at 15.5% for July, marking the third consecutive month at that level after 3 earlier cuts this year. The central bank said the decision reflects high uncertainty over the Middle East conflict and its impact on global supply chains, fuel prices, and food inflation. It also raised the reserve requirement ratio on local currency liabilities from 29% to 39% to tighten liquidity and contain inflationary pressures. The bank warned that inflation is expected to accelerate in the short to medium term, potentially reaching double digits depending on the duration of global geopolitical tensions and domestic fuel price adjustments. Meanwhile, Ghana has launched the Sustainable Finance Roadmap aimed at strengthening climate-aligned investment and improving long-term financial stability. Johnson Asiama said the framework will help align the financial sector with sustainability goals while supporting economic resilience and green growth. Let's listen.
As Ghana strengthens its economic foundations, it is equally important that our financial system is equipped to support resilient and sustainable growth. Part of that resilience means reckoning with a new type of risk. A changing climate now bears directly on financial stability, just as the recent flooding across Ghana reminds us. Colleagues, such risks do not stay in the environment alone. They travel, and they do travel into the financial sector through the value of assets, the cost of claims, and the security of lending. The instruments and structures of the past that we used to have were not built for these, and meeting them asks us to recalibrate how we supervise going forward, how we price risk, and how we plan. Indeed, while we cannot predict the future with certainty, we can shape it through the choices we make today. That future will only become a reality if we are intentional in creating it. It is now clear that climate change and other emerging sustainability challenges are no longer distant concerns. They are realities that increasingly shape our economies, our businesses, and our financial systems. Hence, responding to these challenges is not simply an option. It is a responsibility, one that we owe to our nation.
In Egypt, the Suez Canal's dollar revenue rose 23% to $4.67 billion in the 2025/2026 fiscal year as more ships returned to the waterway following months of Red Sea disruptions. Vessel transit increased 10% year-on-year, while cargo tonnage rose 22% as easing regional tensions and lower insurance costs encouraged shipping lines to use the canal instead of the Cape of Good Hope route. The recovery follows a sharp drop in revenue to $4 billion in 2024 from $10.2 billion in 2023, with the Suez Canal Authority expecting further improvement as regional conditions continue to stabilize. In the meantime, Esau Prasad of Cornell University discusses how a more disrupted world economy is changing global governance, capital flows, and the role of international financial institutions. He highlights the need for better coordination amid increasing fragmentation and overlapping multilateral frameworks. Here are excerpts.
The fruits of this prosperity are not evenly shared between or within countries. So the hostility that we're seeing around you, I think, is going to be a feature. There is going to be uncertainty that comes from the geopolitical frictions. There is going to be uncertainty that comes from the policies of the large economies, especially the United States, and there is going to be uncertainty coming from other sources of volatility that are always present in the global environment. Life is not fair, unfortunately. There are large countries like the United States, perhaps even Europe, that can run very large budget deficits, that can run persistent large current account deficits and not suffer the consequences. Emerging market countries don't have that room for maneuver. You have to be disciplined with your policies. You cannot assert that other countries need to treat them fairly, yourselves fairly as well, because that's not the world we live in. So that means that you have to come up with strategies. That means creating more domestic buffers, perhaps by diversifying your relationships, both economic and geopolitical. You have to think about strengthening your own institutions, your macroeconomic policy frameworks, all of which I know Nigeria has been doing. So in this world of hostility, I think each country may not quite have to go it by itself, but the reality is that this is a moment when each country's resilience is going to be very sorely tested. Now, moderator, you put on the table one interesting aspect of what this means for central banks. Now, central banks, as we've been discussing again throughout the day, have a big task before them. The classical view of central banking, at least in the academic literature, is very, very clear. That what central banks can provide is monetary stability in the form of low inflation. They can provide financial stability, but ultimately, the productive potential of the economy is not going to be determined by monetary policy. It's going to be determined by the institutional framework. It is going to be determined by the macroeconomic policy framework and so on.
In energy news, Morgan Stanley has cut its Brent crude price forecast for the rest of 2026 and 2027, citing the faster than expected reopening of the Strait of Hormuz and a shift in market focus towards an expected oil surplus. The bank lowered its third quarter 2026 Brent forecast to $75 per barrel from $90, while its fourth quarter forecast was reduced to $75 from $80. It also expects Brent to average $75 per barrel in the first half of 2027 and $70 in the second half. Morgan Stanley now projects a global oil market surplus of 4.8 million barrels per day in 2027 as Middle East oil exports recover and supply conditions improve. In Kenya, Vodacom has acquired the government of Kenya's 15% stake in Safaricom through a block trade of about 6 billion shares at 35 Kenyan shillings each, with the government receiving approximately 204 billion Kenyan shillings. The transaction, completed on the Nairobi Securities Exchange before the close of the 2025/2026 fiscal year, is part of a broader restructuring of Vodafone Kenya's ownership. Once the transfer of the remaining 12.5% stake in Vodafone Kenya is completed, Vodacom will own 100% of Vodafone Kenya and hold an effective 55% stake in Safaricom by the end of June 2026. In other news, Canada is hosting the 11th annual Global Conference on Energy Efficiency, bringing together policymakers and energy leaders to accelerate the transition to more sustainable energy use. Fatih Birol of the International Energy Agency discusses the road to energy efficiency, focusing on how efficiency improvements can reduce costs, strengthen energy security, and support global climate goals. Let's listen.
Many governments around the world, I talk with many government leaders, business leaders, they are reviewing their energy strategy, choosing new partners, new technologies, new fuels, new trade routes to be on the safe side and not to see such a nightmare in terms of the availability of the energy supplies. And many energy commodities are scarce, but today, when I look at the energy world, what is most scarce is the trust. To have trusted partners energy partners, trusted trade routes, trusted technologies. I was last month again in Canada, visiting Prime Minister Carney, Tim Hudson, other ministers, Minister Champagne, you will see in this afternoon, and others. And I told the Canadian public, business leaders, government leaders, Canada, being a trusted partner, AAA market economy, democracy, has huge chances in the new paysage, in the new landscape of the energy world to play a bigger role. Many governments around the world, I talk with many government leaders, business leaders, they are
Agreement with Egypt on reviews of its Extended Fund Facility, EFF, and Resilience and Sustainability Facility, RSF, potentially unlocking about $1.6 billion subject to executive board approval. The agreement includes about $1.5 billion under the EFF and $136 million under the RSF, bringing total disbursements under both programs to about $7.2 billion. The IMF said the impact of the Middle East conflict on Egypt's economy has remained relatively contained, supported by timely policy measures, including fuel and electricity price adjustments, lower government energy consumption, and spending reprioritization. I am Melissa Enoch, and that's it on News Now for today. The show returns shortly after the break with Grace giving us our market updates. Stick around.
Once again, visionaries and decision makers from across Africa and the globe have joined to shape the energy narrative, not only for this continent, but for the world.
A platform where the continent's most transformative energy stories are being told and shaped.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for today's market report. Hello there again, Grace.
Thank you, Melissa. Let's take a look at how the markets traded today, starting off with equities. The NGX All-Share Index advanced 0.49%, while the BRVM rose 0.68%. The Nairobi Securities Exchange advanced 0.60% to 224.15. In Southern Africa, the Johannesburg Stock Exchange slipped 0.20%, while Mauritius Semdex edged up 0.02%, and Zimbabwe ZSE gained 0.70% to 417.81. In North Africa, Morocco's MASI rose 0.14%, while Egypt's EGX30 climbed 1.33% to 50,487.96 as at 14:19 GMT. To the currencies, the rand weakened 0.39% to 16.38, while the Egyptian pound was down 0.07% to 49.22. The CFA franc weakened 0.34%, the Kenyan shilling strengthened 0.01% to 129.47, and the Moroccan dirham weakened 0.26% to 9.40. Meanwhile, the Naira strengthened 0.03% to 1,381 Naira 68 kobo as at 13:44 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude was up 0.04% to $73.18, while US WTI gained 0.27% to $70.94. Natural gas climbed 2.14% to $3.25, and Arabian gasoline edged up 0.10% to $3.06 as at 13:36 GMT. To metals, gold slipped 0.09%, while copper rose 1.44% to $6.18. Platinum fell 1.15%, aluminium declined 1.64%, and iron edged down 0.07% to $100.26 as at 13:37 GMT. Now, finally, to soft prices. Cocoa gained 2.46% to $5,089. Coffee surged 5.85% to $294.05. Cotton rose 0.47%. Palm oil fell 1.44%, while sugar added 0.47% to $14.85 as at 13:39 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Thank you for giving us those market updates, Grace. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching, and we'll see you all same time tomorrow.